they're the only folks that actually put up a weekly update. So it's really good data. And yeah, I'm going to look at it nationally. And then at the end of the video, I always talk about the Central Ohio market and give a local flavor to it. So my name is Jason Ferrier. I'm with Kiger Realty. I'm a real estate agent and an investor here in Central Ohio. And yeah, thanks for joining me on this Saturday afternoon. All right, so let's get to what's happening. Actually, I'm going to use this view, I think, or maybe this one. There we go. I'll use this one. All right, so the title of this Redfin update is Housing Market Update Listing Surge, Luring Some Buyers Off the Fence, but Near Record Housing Costs Price Others Out. The title of the updates every week are pretty much the same, which is like, this is surging, that's surging, but high prices keep people on the sidelines. And it's just kind of par for the course. But there are some big things that happened over the last week as far as the trends go. So new listings rose 13% from a year earlier, their biggest increase in nearly 3 years. But home prices and mortgage rates remain elevated. Yeah, rates for 30-year mortgage came down, I think, under 7% 2 weeks ago. But then last week they shot up after CPI and the 10-year treasury went up. So they ended up over 7%. And so, yeah, they're back up over 7%. The median U.S. housing payment was $2,686 during the 4 weeks ending March 10th, just $30 shy of last October's all-time high. That's due to a combination of still high mortgage rates and rising prices. While mortgage rates came down slightly this past week, after increasing for 4 straight weeks, they're still near 7%. And sale prices are up 15% year over year nationwide. I'm sorry, 5% are up 5% year over year nationwide. On a local level, prices increased in all 50 of the most populous U.S. metros. The first time that has happened since July of 2022. So that shocked me, right? Like now in the latest report, all the top 50 metros saw price increase year over year. None had declines, none, which was crazy. High housing costs are still pricing out some would-be home buyers, with pending sales down 6% from a year earlier, but more house hunters are wading into the market. Mortgage purchase applications rose for the second straight week in a row. That's partly because supply is steadily improving, giving buyers who can afford elevated prices and rates more homes to choose from. New listings are up 13%, the biggest annual increase in nearly 3 years, and the total number of homes for sale is up 3%, the biggest increase in 9 months. So nationally, yeah, new listings were up a lot. Remember, these are all national numbers at first, and inventory was up a whopping 3%. Mortgage rates are likely to stay high for a little longer than expected, with the latest inflation report essentially eliminating any chance of the Fed cutting interest rates before June, said Redfin economist, research lead Chen Zhao. Buyers who can afford to may want to get serious about their home search now, as housing costs are unlikely to fall anytime soon. The uptick in listings should be another motivator for buyers. There's more to choose from, and improving inventory may bring out more competition from other buyers as we get further into the spring. Some buyers have already gotten the memo, with mortgage applications finally increasing after weeks of declines. So, big thing stood out to me here is how he talks about mortgage rates are likely to stay high for a little longer than expected with the latest information. Yeah, so it doesn't seem like home prices are, crashing, in most metros, especially here in Central Ohio, but and mortgage rates aren't crashing either. So will home prices decline? Will home affordability improve? It'd be nice if it would. I know a lot of people who are wanting to buy their first house and they can't because they're just priced out. Like their credit's good. I just saw somebody on Facebook say this. Credit's great. Awesome credit. but they're like completely dejected because they're priced out of the market. And it's sad because traditionally, if your credit was good, if your income was solid, you could afford a house. But now home prices have ran up nationally 40% over the last 4 years. It's not healthy. But while it's not healthy, you really can't complain about it. You can just kind of play the hand you're dealt and deal with it, and make things work anyway. So let's go to the leading indicators. I'm not going to go through the mortgage information because that's basically what we just talked about, near 7% mortgage rates. I always think this is funny though. Well, let's look at the mortgage purchase applications first. So this right here, up 5% from a week earlier as of the week ending March 8th, second straight week of increases. So mortgage purchase applications are definitely up. That's good if you're in the mortgage business, I guess. And it's showing some more demand, I suppose. But they're down 11% from last year. So still down compared to this time last year. And last year was bad, but they are up a little bit from last week. Home buyer demand index. This is the funny one. I love their home buyer demand index. It's like some kind of weird secret algorithm they come up with to show you, how much demand's out there. It's up 5% from a month earlier, but down 10% from last year. Whatever, right? Whatever. Google searches for homes. I think this has more merit than Redfin home buyer demand index. Down 4% from a month earlier, down 19% from a year earlier. Less people looking at houses online. Less people going, hey, what can I buy in my neighborhood? Or who bought the most expensive house in my neighborhood? Maybe some of the fear of missing out is starting to dissipate maybe. So that I like the Google trend. I think that's a good stat. Touring activity, another good stat, up 29% from the start of the year. At this time last year, it was up 20% from the start of 2023. So I guess that means it's up 9% year over year, because at this time last year it was up 20%. Now it's up 29% from the start of the year. So like that's 9% difference. I don't know why they don't just say that, but this is from showingtime.com. So that's some good data. I wonder how much they had to pay Zillow for that data. I wonder how much Redfin had to pay for that. Median sale price. This is interesting. 371,750. Not crashing, folks. Not crashing. 5.1% year over year. Median asking price 399, up 4.9%. Monthly mortgage payment $2,686. That's at a 6.88, but the rates I saw were over 7%. So this is just shy. This is just $30 shy of the all-time high set in October 2023. But like the fact that they use 6.88 on this and not over 7 probably means we're maybe at a record right now. Pending sales. I thought this stat was kind of cool. Pending sales, 79,000 units, almost 80,000 units, down 5.8%. So when a house goes into contract, theoretically, that's a pending sale. The terminology is different for every state and every market. Here in Columbus, pending sale means it's a cash offer usually, and there's no contingencies with it. But in other areas, I know pending just means it's in contract. But new listings, look at that, 85,000, up 13%. Active listings are at 780,000 units. So if pending sales, the houses that are going into contract, if that is down 5.8%, and if pending sales are at 80,000 units, new listings are at 85,000 units. If you're selling less than you're bringing in, it means inventory will rise. So I thought that was interesting. I'd like to go back to the other reports and find out what that delta was, but it'll be cool to review it as we go forward. Active listings, 780,000 units in the United States for sale. Biggest increase since May of 2023, they're saying. And new listings had the biggest increase since June of 2021. So more new listings, more active listings hitting the market. By the way, folks, if you want to know if prices are going to rise or decline in your particular metro, wherever you live in the United States, just look at active listings and track it over a period of time. Look at your active listings and the price range you want to buy in and write it down. I mean, you can write it on a legal pad. or put it in an Excel file if you want and say, all right, here's the date. Here's how many active listings we had. Now I'll move forward another month. Here's the date. Here's active listings. And then look at them. Are they decreasing or are they increasing? If active listing, if active listings are increasing exponentially in particular, then prices may soften. If they are decreasing, then they obviously could keep going up. Prices could keep going up or just remain sticky. Months of supply, 3.5 months. 4 to 5 months is considered a balanced market. So we're at 3.5 months right now, still a seller's market technically in the United States. Share of homes off the market in 2 weeks, 40.2, up from 38. So homes are moving faster. Median days on market, 45. That's down 2 days. So inventory sitting less time. Share of homes sold above list price, 25.1, up from 24%. Share of homes with a price drop, 5.6%. An average sale to list price ratio, 98.6, up 0.3 points, meaning sellers are getting 98.6% of what they're asking, essentially, for houses nationwide, right? Every metro is different. And think about that for a second. Since every metro is different, there are a lot of people on YouTube, Instagram, wherever that say, hey, prices are crashing in my neighborhood, or how prices are crashing in my city. Well, if they are crashing in a particular zip code or area of the county or area of the state, and overall prices are up or activity is up, it just means that there's that much more in the areas that are growing. So it kind of has to balance itself out, right? This is the stat that just blew me away. Median sale price. Metros with biggest year-over-year decreases in the median sale price. There were zero of the top 50 markets that they track increased in all metros. The biggest increases were San Jose, Newark, New Jersey, Boston, West Palm Beach, Florida, and Fort Lauderdale, Florida. Pending sales increased in 12 metros. So houses going into contract, eventually being sold. Milwaukee, Wisconsin, San Francisco, Cincinnati, Minneapolis, San Jose, all had the largest pending sale increases. Need more activity if you want to restore balance to the housing market. San Jose, California, Phoenix, Las Vegas, Minneapolis, and Jacksonville, Florida for new listings all saw the largest increase in new listings. Look at some of these. San Jose, California, 30% increase in new listings. And then the biggest declines, New York, Atlanta, Newark, New Jersey, Chicago, Virginia Beach, Virginia, and Philly. So that's where obviously you look at new listings being down that much, like in New York, and pending sales are down 15% in New York as well. So just not a lot of activity, very frozen market. All right, let's get to some of the charts real quick. Median sale price up 5.1% year over year. We saw that. It looks like, it's already over 2023. The question is, will it land over 2023 at the end of the year? I think so. I think 5% year over year, the entire year, is probably it's very possible. And on average, the United States sees about a 6% increase in housing prices every single year. For the last 20 years, you average them out. So 5% is a little under the average. However, it seems to be pretty healthy versus a 10, 15, 20, 25% increase. Look back in, look back in 2021, right, where the house prices were. And then look in 2022 and 23. It's just funny because, there are a lot of folks, and I understand what they're doing. I completely get it. But a lot of folks will say, I'm going to wait for a housing crash. And they were telling me that in 2021. But now you're 2023 and, or sorry, you're in 2024 and it's like, whoa, the crash hasn't happened yet. So I guess they're still waiting. Median asking price up 4.9%. And this metric, I think, throws a lot of people for a loop they look at this and think that people are just wanting more and more for their houses, which I guess they are theoretically. But this stat tells me that there's a lot more expensive houses on the market than affordable houses. In fact, like here in Columbus in Central Ohio, the disparity between houses priced over 500 grand and under 500 grand is monstrous. Like there's a 38% increase in the number of active listings for sale in Columbus over 500 grand this month. I'm sorry, for February. But under 500 grand, it's actually down like single digits, like down like 4%. So less new listings or less active listings of affordable homes, more active listings, a lot more active listings of expensive homes. Let's look at, yeah, home buyer housing payments. That's no good, right? Nobody likes to see that. It's crazy how expensive houses are and the payments with interest rates the way they are. Pending sales down 6% year over year. Yep, it's down. And a lot of people didn't think it could get worse with pending sales. I heard a lot of people say we've hit the bottom. I guess not. New listings up 13%. This certainly helps inventory. So if demand doesn't increase and keep pace with the new listings, then you're going to see active listings go up. So here's active listings. Now, it's up from 2023, up 2.9%, but the number of houses for sale right now is way under what we had before the pandemic. Before the pandemic, it was like 1.1 million approximately. Now we're at 780,000. So we're still way under, 2019 levels in active inventory. Way better though than 2022 or 21. 3.5 months of supply. And this is the absorption rate, you can call it, and it shows you how many months of supply we have if we don't add any new listings. %40 of pending sales under contract within 2 weeks. So you can see here, right? I mean, how fast people are actually putting houses in contract within 2 weeks. It's more than it was last year, but a lot less than it was in 2022 and 21. I mean, back then, like majority of houses were going into contract within 2 weeks. Homes sold in a median of 45 days, definitely less than last year, but look elevated certainly compared to 21 and 22. I mean, back in 2022, homes sold in a median of 28 days nationally, 29 days. Quick, right? Now it's looks like it's becoming more like normalized. 25% of homes sold above list price, above final list price, meaning they could have had a price cut or something, I guess, before that. 5.6% of listings had price drops. So, yeah, people are dropping their price, no doubt about it. But again, if you have a bunch of expensive inventory on the market, which I suspect most markets do, you're going to see people drop prices because, they may have listed the house too high at the beginning. And by the way, that's like one of the things, if you happen to list your house too high, it's hard to retreat from that and get the same value out of it. It's easier to price it where the market will like it and actually maybe bid it up. Yeah. So no doubt have more price drops than we did the last few years. All right. Let's skip down to the home buyer demand index. This is that goofy stat they have. It's down from the last 3 years. No doubt home buyer demand is suppressed, probably because of interest rates being the way they are and the fact that people may be sick of hearing about the housing market. That's probably a case too. but also because, quite frankly, there is like zero inventory, affordable inventory out there. So, not a lot of transactions. People are kind of, dejected, like the story I told you about the person on Facebook. And so they're like, nah, the demand's not there. All right. So that's for national. Now let's go to the local market. All right. So again, Redfin data is awesome. You can go here anytime you want. I'm in the I think it's the downloadable housing market data, they call it. But this is you can break this down by metro, county, if you want. And they have all types of information here at the top. So I've already selected Columbus, which is where I live outside of Columbus, Ohio. And the Columbus metro area includes like all the counties around the area. Columbus is definitely different than the national numbers. You'll see that in a second. So year over year, new listings up 2.1%. So new listings nationally were up 13%. Columbus up 2.1% last 4 weeks rolling average. All right, let's go to active listings. These are houses for sale. Whoops, something happened here. I got to go back. Put in my area again. All right, that was new listings. Let's do active listings. All right, so active listings, houses for sale. Sorry about that. It's a little elevated compared to last year, right? We're at 1.02. Oh my gosh. 1.02% more active listings. I mean, that's like staggering, right? No, not very good. And the trend is actually going down. So our new listings rolling up a couple percentage points. Active listings, no surprise, are only up 1%. Just not a lot to choose from, folks. And look at last year, what happened. I deselected all the years except 23 and 24. Look at this. I mean, last year it was like, boom, just shot right up as far as the number of active listings, then completely tanked. It'll be really interesting to see it as spring progresses if we're going to eclipse last year as far as active listings. It's going to take a lot more new listings than that and a lot less demand. Oops. So let's look at median sale price now. Unbelievable. $325,000. Now, Columbus Board of Realtors has it at 300 grand for February when I pulled the data. And by the way, if you're a real estate agent in Central Ohio, you can go to the MLS like the day after the first day of the month and look backwards in the previous month. You don't have to wait for the Columbus Board of Realtor report to come out. So you can get ahead of the game and get your clients up-to-date information. So maybe you knew that already, but I thought it was kind of cool to highlight. So yeah, median sale price, $325,000. It's elevated substantially, up 6%, right, from last year. And we hit a record last year of 341, according to Redfin. Columbus Board of Realtors has the record at 324, but we have it at 341 back last summer on Redfin. And boy, you certainly hope this price doesn't go over last year, as far as a record goes. But it could. It very well could. I just looked at the top hottest markets in the United States. Columbus was 5, ranked 5th in the nation as far as one of the hottest markets. So with Intel and just the fact that people like Central Ohio, it's kind of the cat's out of the bag. It used to be the best kept secret, but not anymore. You're going to have a bunch of people moving here, and institutional investors are loading up in Columbus and Central Ohio because they know it's a great market. All right, let's look at homes sold. So the number of homes sold is actually slightly less than last year, 3.4% lower. Do they have pending sales up here? I think they do. Yeah, they do. Let's look at pending sales real quick. Pending sale actually just eclipsed last year, up 1.7. So yeah, if there's just a slight bit more inventory, a slight rise in active listings, and a slight rise in pending sales, that hasn't translated yet to the homes sold going up from last year, but it looks like it may. So it's still homes sold are still down compared to last year. I mean, if you're in the mortgage or real estate business in Central Ohio, yeah, your transactions are low. That's just that is what it is. Hopefully, you have rental properties. Hopefully, you do if you're in the real estate business. All right, let's look at. I always like to look at a couple other things here. Months of supply. Wow. 9.3 weeks of supply, which is like 2.32 months of supply, is what we're seeing in Columbus right now, Central Ohio, which is a little bit more than what we had last year, but not much more. And it's trending down, by the way. So last year was pretty even throughout the year, pretty much. It'll be interesting to see if it stays that way as we head into spring and summer. Let's look at the asking price. New listing median price. Let's do that. So when a new listing hits the market, what's the median price? Well, it's skyrocketing straight up. I mean, now it's what's that? 6.56% more than last year. Median listing price here is $336,000. So one could assume that prices will follow the median listing price unless people just don't buy the houses, right? So could we see this keep going up and then the actual median sale price follow? I think we certainly could. So anyway, if you are in Central Ohio and you're trying to buy a house, you really, and it depends on what price point you're in, right? You should get with a real estate agent that can provide you data like this inside of your local subdivision or inside your school district. And that can certainly help you. So something that I do is I put out this report every month. I'll show you right now what this is. So if you go to my website, which is jasonferrier.com, it's not a fancy website, but it has great data. So every month around the 10th to 15th of the month, I put out an update for Central Ohio, and I use the Central Ohio data from the Columbus Board of Realtors. I don't use Redfin data or anything like that. I pull it and I dissect it by school district and price point. And so you can go here and download the report anytime you want. And so this is what the report looks like. So at the top, you have the price points. And on the left, you have the school districts, because you absolutely cannot just look at the overall stats of the Columbus Board of Realtor update for your market knowledge. That's just way too broad, and it's not going to exactly tell you what's happening in your localized area. So I put this out. And by the way, if you're still watching this from another area of the country for some reason, or the replay on YouTube, you have a realtor do this for you. And if they can't do it, find another realtor or have them call me and I'll show them how to do it. It does take some time, but this gives you an idea of where the buyer markets are and seller markets are in Central Ohio. And the red areas are seller markets, the blue areas are buyer markets. And I use the months of supply and the absorption rate to determine if it's a buyer or seller market. So down here at the bottom, you can see the what I call the absorption rate key. And so I have less than 2 months of supply as a strong seller's market, 2 to 4 months of supply as a seller's market, 4 to 5 months is in balance, 5 to 7 months buyer's market, and 7 months of supply or more a strong buyer's market. So look, and every school district and every price point is different for the most part, except a lot of these areas are still strong seller markets. So if you look at the months of supply overall, we're in a seller's market in Central Ohio. And then individually in price points and school districts, there's certainly areas that are buyer markets. So like Southwestern City Schools in the $500,000 plus range of houses is a buyer's market. It has more than 5 months of supply. The median price, I forgot to say this, but I also put the median price over here. So I put the median price so that you can say, all right, well, what's the median in that market? This is a big clue for you. if you're looking for houses, you're a home buyer, even if you're a home seller, this is great data because $280,000 for a median sale price in Southwestern city schools, but houses priced over 500 grand is a buyer's market. No kidding, right? I mean, if the the median price is 280, but you're looking in the $500,000 plus range, there's probably more months of supply there because most people aren't buying houses over 500 grand there. So those properties are probably going to sit longer. However, as you go backwards and look at the boxes on the left, they're all strong sellers markets for the most part because lower priced inventory is scarce. And then look through down here, you can see some other things that popped out to me. I mean, like look at New Albany or Granville. 0 listings or sales. It's not because there's a ton of inventory. There's no listings at all in the 100 in the 0 price range all the way up to 400 grand in either of these markets. It's crazy. So no supply at all. And this is looking at February data. However, like in Johnstown, it's a strong buyer's market for houses priced over 500 grand because I think when I looked at the stat, it was like something ridiculous, like 20 months of supply in $500,000 houses in Johnstown because there are a lot of new building there. There's a lot of new construction, not a lot. There's some new construction, much more so than existing houses. So that's where the opportunity is over 500 grand. In Newark, same thing. $400,000 to $500,000 houses. There's a glut of them, and $500,000 houses and over. There's a glut of them. So in general, the more expensive houses are sitting longer because interest rates are higher, and people who own $200,000 houses right now are like, well, why would I buy a $500,000 house when I got to pay a 7% interest rate and get rid of my 2.5% interest rate? I do know clients that are downsizing. That's a different situation. But when it comes to buyers moving up, those people have kind of vanished, and a lot of people are staying put in their house because they're like, I'm enjoying a low interest rate. Why buy a more expensive house? A lot higher housing payment. I can't blame them for that. That makes sense. But yeah, this chart is on my website. I encourage, if you're in Central Ohio, to take a look at it and download it. And then ask me a question. If you have a question about the chart or any question about real estate, please, shoot me a note. Instagram. I'm on YouTube a lot, on Facebook as well. And yeah, I'm happy to help in any way I can. Let me just see here if anybody. Nope. No comments, no questions right now. Oh, I got some. In California, there's been a lot of listings going contingent, and they're slow to go to pending. Huh. Okay. They must have a different system there that they go to pending. I mean, maybe they're going through inspections or, financing. It could be financing because a lot of times you put contingent in the MLS. As an agent, I'll put contingent if it has to go through financing checks or if it's contingent rather on financing or the inspection. So maybe that's what they're doing, negotiating the financing or the inspection results. I don't know. I'm not in California. I'd love to know from an agent though. I like the little thumbnail, Coors Light thing. That's funny. Oh, here's another one. He said the same thing. High-end custom houses are hard to price, so sellers commonly overprice initially to test the waters. Eventually, the house sells at asking, or they have to drop the price if they really want to sell. Yep, that's true. High-end houses are harder to price, no doubt. Houses in a subdivision, like, suburban cookie cutter type houses, those are like the easiest in the world to price. Those are like a dream to price. Rural houses are a challenge too, like houses out in the middle of nowhere where you got to like expand your search area like 10 miles to find anything. Those are always a challenge because there's a lot of nuances there. So yeah, but high-end houses, definitely hard to price. I agree with that. And a lot of people shoot for the moon. I agree with that too. They shoot for the moon out of the gate, and then they have to kind of retreat from that It's much better to price your house competitively off the bat. And then same guy, Coors Light said, nice drill down report. Hey, thanks for the comments, Coors Light. I appreciate it. Cool. All right. Hey, I am going to do this again next week on Thursday, hopefully, when Redfin releases their report. And until next time, I'll see you on the next video. Have a great weekend, folks.